What is up, everyone? Today we're going to cover range trading, how I use them frequently to identify continuation, shifts in trends, and how to jump into a position, and ultimately how to better manage your risk on trades. So all really great things to know and be good at, so you don't want to miss this one. And before we get started, I would really appreciate it if you hit that like button to support the channel. And if you found this video helpful and you like this content, don't forget to subscribe so you don't miss out on future updates. As always, this is not financial advice. All right, let's go. Okay, you can find ranges in almost everywhere in price action. Okay, you just got to look closely and know how to identify them, right? So what am I looking for when I spot a range, right? It's basically I'm looking at using my parallel channel tool here. Okay, you just draw out your range. You'll take it from a high to a low, or from a low to a high. Okay, so what am I looking for? So basically you're looking for a move inside the range to basically formulate the range, right? And then what you're doing is you're looking for a breakout and retest back inside the range. And you typically, what you'll notice is when price breaks outside of that range and has its retest, that ultimately you'll just be forming essentially what is a new range right above the previous range, right? So from your high to your low, okay? So then you're just ultimately playing around in a new range as you see these in bull markets, right? You just see basically these laddering ups of these ranges. And so ultimately what you're looking for is you're looking for reasons to trade to the top of the range or to the bottom of the range, essentially, right? So what you're doing is you're looking for reasons to get long or to get short. And so if you were looking for reasons to get long, right, you're looking for reasons that have a area of demand at the bottom of the range, right, that have a clear high and clear swing low, right? And so ultimately you're targeting either the range EQ, the 50th percentile, right? So we'll just take our fib here and show you. So basically the 50th percentile of the range is that 50th percentile of your fib, okay? And so you're looking at reasons to target the top of the band of the range or target the below, right? So reasons to target the top would be if you are on a lower time frame, right? You are seeing it come down to the bottom of the range. So we've established our low, and maybe we come back down again somewhere like this, right? And then ultimately you're waiting for that break in market structure, okay, to target the top of the band. What I mean by that is basically right here. So you get your bullish order block at some point. There's a down candle before an up candle, invalidating that down candle and then breaking that market structure, making a higher high, okay, and ultimately just making a smaller, lower time frame range. But then you're targeting the EQ or you're targeting the top of the range, okay? And so then on the vice versa to that, you're looking at reasons to get short near the top of the range, right? We've got our clearly established high, and then maybe we get a deviation above, right? Something like that. But then ultimately, you're looking for that break in market structure the other way, right? So basically right here, you've breached that low, right? So this is the trend. You got your higher low, higher low, higher low. You've breached that low. You're looking for a bearish retest on that now bullet bearish order block, okay? And then you want to target the bottom of the range, or potentially this range is going to break downward, okay? And so you're looking at reasons to start getting short within this range at the EQ if the trend has shifted, okay? And these are ultimately known as your bullish order blocks, okay? Or your bearish order blocks, okay? Make that red. Okay, let's get right into some examples here. Okay, so we're on the 6 hour, so you want to start on the high time frame, right? So you want to start to identify those key levels on a higher time frame, and then you can zoom in on lower time frame to find your entries and to really pinpoint, those well-defined areas of risk and get into a position. Okay, so you want to start from high time frame and then zoom into low time frame. Okay, so start off right here. We got a range. Okay, we got our swing low and our swing high. Okay. So we'll take our range tool here, bring it down to the low. We'll just go off of the ultimate wick off that first move. Okay, we got the wick, and then we've got basically, well, this is potentially a deviation. I'm going to take it from this wick here. Okay, so basically deviation below that range bottom band, but ultimately ranging within inside of here. Okay, and so what are we seeing within this range now? We're looking for reasons to get short. We're looking for reasons to get long. Okay, depending on where price is. If your price is hovering near the top of the range, our expectation is that this is resistance until proven otherwise, and at the bottom, this is support until proven otherwise. Okay, so we're looking for that bearish and bullish order block within this range. So right here, let's start with the first up move here. Okay, so we've got our swing high and we've made a swing low, made a swing high here. So where are we looking for that bearish order block, that break in market structure that we can get short from here, assuming that this is the beginning of a range, okay? So we're looking where the last up candle is invalidated and then market structure is broken. So that's your bearish order block right there, okay? So on this green candle, why is that our bearish order block? Well, because we had an up candle that gets invalidated with this big down candle, right? And we broke market structure, that trend. We broke market structure right here, okay? We made a lower low, and then we ultimately came back up and retested in that bearish order block as a bearish retest. So that right there is your trigger to get short, and then your stop goes above the high. So you're risking from your entry somewhere in here in that bearish order block, you're risking up to 3% potentially on this trade right now. However, you are targeting the range EQ or the range low. Okay, so if you want to look at your R&R, right? So you're getting in on that bearish retest. Okay, so your risk is above the high, so 2.58%, and if you're targeting the EQ, okay, your R&R ratio is just over 2.0. And then if you're targeting the lower band of the range, your R&R goes much higher, obviously, almost to 5, okay? Okay, so now you've seen the price come back down to the bottom of the range, and so what are you doing? You're looking for the vice versa of what we just did, right? So you're looking for your bullish order block and the breaker of that order block, okay? So basically, where's that last down candle that gets invalidated with a new high, break in market structure, and then a retest, or looking for that break at least first so then you can enter on the retest, right? Well, it's right here. Okay, so we've got our, we got our last down candle here, okay, invalidated by this massive up move candle. We have broken market structure, okay, that is a new high compared to these lower highs, okay, this one didn't quite break it, we wicked above, so it would have faked a lot of people out, but then smashed up above it, just got rejected off the EQ, but ultimately we're looking for that retest of this market structure break and of that bullish order block. It's red, it's tripping me up. Make it green. Okay, right? So last down move candle, invalidated up, bullish retest right here. Okay, on that wick, that's your target to go long. So you'd be looking for that. You'd take your long, okay, within that order block. Your risk would be below the order block because that is where you're invalidated. Some people can decide to take more risk and put it below the actual low, which would be up closer to 3%. But if you have seen the strength of this move, right, and you're assuming that this order block is valid and you've identified that, then I'd have no problem putting it below the order block, okay, and you get your retest, and then you're targeting the range EQ. Okay, so you got a 3.44 roughly R&R there, or you're targeting the range high again, and your R&R obviously is a lot better, 8.18, okay? Okay, now back to the range here overall. So say you're playing around this range and you're trying to take advantage of the next move if you're thinking that we're going to break to the upside of this range, okay? So what are you looking to do? Well, you're looking for a break of that upper band of the range, right? So you're looking for basically a high time frame, break above, right? And then gain it as support, and then basically up, right? So that's what we got here. Okay, so let's take a closer look. You're looking for a breakout and then move back inside that range, right? So we've got our breakout here, retest, okay, continuation. But then when you start to see this coming back down, what did we see here? Break in market structure, clear resistance, okay. Okay, so broken market structure, higher low, higher low, higher low, lower low, okay? Break in market structure, retest of that bearish order block, so you're targeting down, and you'd want to target, at this point, likely the top of the band of that range, because that has been clearly established as support at this point. Now, oftentimes, like I said, what you're doing is you're looking for an entry within that range when you break out, okay? You're looking for a breakout of that range, okay? And then you are looking for an entry back into that original range. Okay? So this is what you're looking for right here. an entry on that range EQ area. Okay, and so basically, what did we see? Okay, we saw a breakout. Okay, breakout established as support, but failed. Okay, and came back down into the range EQ. Okay, right there. So we had established a new range. We had our high, right? We had our low, okay, above that range. And we came back down and we retested just a little bit front ran if you're targeting exactly the range EQ, but that's where we got it, right? So we'll take our fib from this whole move. It comes down to the 618, okay, so that's your sweet spot for the move to go outside of this range, this previous range, and continuation. And obviously we're in a bear market, so it's different environmental factors here, but the theory remains the same, okay? And so when price is getting down to this area and you're saying, okay, I want to get in here, I know I'm going to get long soon, this is where I want to enter, but you're trying to find that entry and you're going, okay, so maybe you're seeing this right now, right? So maybe you're seeing that and you want to look for reasons to get long, right? So you're basically looking for this candle to be invalidated. Let me just draw it one sec. Okay, you're looking for that break in market structure, last down candle invalidated by a green candle, make a higher high comparison to the lower highs that you've been making, break in market structure, and then you want to enter on that retest, okay? And what did we see? So let's just play it here. Down candle. It's continuing down. Oh, what's that right there? Okay, so at this point, you're looking now at a break in market structure. Up candle invalidated this down candle. You're looking for that retest. So we'll mark it out. Whoops. Okay, mark it out. There's your bullish order block on that last down candle. What do we see? Okay, retest, enter. Another retest almost, and up. Okay? And now, just like we did this earlier, right? We said we want to enter on a retest of the mid-range of the previous range. So now we've broken back down below this range, okay? So now you want to target the mid-range of the previous range that we had above, right? So you're targeting that EQ. So that's your entry, okay? And then you're targeting the EQ of that range because now the expectation, stop below the low. Now the expectation is that if market structure is shifting and this isn't going to continue, then this is your entry to go short, right? To come back downside inside this range, okay? Let's see what happens. Comes back up. I actually forget what happens. Okay, so we start toying around in here. So you could have taken your long up to here, fine, but you're at least targeting the EQ. Okay, and then now we're just playing around. We had a swing failure pattern here. Okay, not able to really clearly break out of this range, come back inside, playing inside the range EQ. Still toying with the EQ, back up to the range high. Okay, still toying maybe a breakout above. Trying to hold it as support. Nope, back down to the EQ, and then there we go. There's our dump. And the dump comes right back down to this original entry right here where we had just near that range EQ, the previous range. And now that we're back inside of this previous range, I'd be taking that range out further, just extending it, and now playing around inside of it, targeting, either the EQ or top of the band of this range here or the bottom band, right? So there's up near the top of the band, EQ, now target range low. All right, there you go. Thanks everyone for joining. I really appreciate it. I hope you found this video helpful in some form, and I really would appreciate a like and a subscription if you did find it helpful, and I will see you on the next one.